Tonight we're with the Monday class, and we will be talking about trading crab. Crab is one of the trend reversal patterns, which means that crab is supposed to be traded somewhere at the end of a trend. Other trend reversal patterns are butterfly. Also, another pattern is head and shoulders. All those three patterns are trend reversal patterns, and we're supposed to be looking for those patterns not everywhere in the trend. We're supposed to be looking for the pattern at a place where we believe price will reverse. And those places can be found on a higher time frame. Let's say we have strong resistance or support area coming from a daily chart, and we find a sell crab on 1 hour chart at that resistance level. Now this sell crab pattern will be having very high probability because it's found at this resistance area. Now I will start drawing on my charts, and first I will give you an example by me drawing the pattern on the chart, and then we'll actually see this pattern on the candles like a live pattern, so you guys can understand how it works. And we'll also talk about where are we supposed to place the stop, the limit orders, where the entry goes, most importantly. And also, I know that a lot of the traders here are very confused of where to be looking for those patterns and how to actually go from the higher time frame to the lower time frame, and where those reversal areas might be. And this is something else that we'll talk about. Now first, I'll start by explaining what crab is, and then we'll go from this point. Now, what I will do is I will first draw Gartley pattern, because I know that most of you guys probably know Gartleys. And when I explain the Gartley just very fast, then we'll talk about the crab. In trading Gartley, what we have is, first we have main swing, and this main swing we usually call XA, and then we have a sub swing where we have A, B, C, and D. And what's the point of Gartley is finding area, and usually is this D point here, where the buyers and the sellers will be executing the same orders. Now here in this case, buyers and sellers will be executing sell orders at 109.50. And why is that? I might have to redraw it if I didn't get it right, so it will make sense for everyone. But let's say you're a seller. We all know that there's two groups of traders, basically, buyers and sellers, bulls and bears. Let's say you're a seller, you're doing your analysis, you've been trending with the trend, you've been selling off. Every time price pulls back to a higher level, you'll sell the high, then price goes down, it pulls back, you're selling the high, price goes down, it pulls back, you're selling the high. And what you're doing is you're waiting for probably past support becoming resistance level to converge with your fibs. Let's say like here we have past support becoming resistance level, converging with your 786 roughly, and you're planning to sell this 786 level. And 786 is at 109.53, so you probably will place your order somewhere around 109.50. Now, let's say you're intraday trader and you saw this bullish trend here from A to B, and then you were planning on buying C because you knew that price is going up for the intraday. And what you do is you place your fib from the A to the B, and then you find your entry at the C, and you're planning to exit maybe one of your profits at the same level as the B, and then another profit maybe at 127, maybe the third one at 1618 if price goes all the way up to 1618. Now, note how here at the 127, also the 786, here the buyers, the sellers are selling 786, and here the buyers, 127, their exit, is also sell order. Once they buy, their limit order is a sell. So the buyers are also selling at 127 or 109.50, exactly the same area where those sellers are putting their entries. Well, what do you think will happen at this level when buyers and sellers are selling? Well, price will crash lower. Now, this is basically a Gartley pattern. And this is trend continuation pattern, which means that trend has been going lower and lower, and we trade sell Gartley in a downtrend. Now, with the crab, the picture is a little bit different. Now, if price goes up, 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 and hits a level above X, this is when Gartley fails, and we call it failed Gartley. Now, any Gartley that we find about X, we won't trade because it's not a Gartley anymore. Now, there is another pattern, like butterfly, also crab. Well, those patterns have very high extensions. And a lot of times we'll see this CV leg very, very long compared to the AB leg. And what we see in this case is price convergence here between those two fibs, 1618 and 2618. It can be 3618, it can be 224. But basically the convergence is from the main swing, XA needs to be 1618, and then the subswing can be either 1618, 2618, 3618. It can also be 224. Here on my charts, you guys see it as 124, but this is actually 224. And where we find convergence like this, we are going to sell this pattern. Now, note that crab is very rare pattern because it's rare that we'll see swings with such a different size of the legs, but it has very, very high probability if found on the right place. It has higher probability than butterfly, higher probability than head and shoulders, even though those patterns have very, very high probability already. Now, it's very rare that you'll see crab fail, and most of the time when you see one, it will work to the pip. It will go, it will touch the convergence, and then price will collapse. And why? Because it expands too much. It went way above. It wasn't supposed to go that far. And then we normally would see very fast downtrends. Now, note that we look for those patterns at, if it's a sell crab, we would look for this sell crab on higher time frame resistance level. Now let's say that we're now on 1 hour chart. Well, this level here must be, let's say, resistance from 4 hour or maybe daily time frame. Once we see that resistance and we find the convergence at this resistance level, where this is right away a sell entry. This is very, very high probability pattern because it's found at resistance level and we have the convergence right there. Now, first thing we do is we set up the entry, and what do we do for stop? Where do we place the stop? Well, a couple of things can be done. First is you can look for candlestick formation, and I don't really recommend this method, and I'll explain why. Now, first thing you can do is wait for candlestick formation. Once bearish candlestick formation like engulfing bearish or maybe evening star is formed, you can place your stop above the candlestick formation and enter bearish. Now, why I don't like this method, but a lot of traders feel a lot more confident, more comfortable by using candlestick formations, but I don't like it is because most of the time when price hits an entry level for a crab, you will see the price collapsing. Even the move within the first candle can be very, very large. Now we want to enter at the convergence level, maybe a couple of pips below. So if I have here the convergence 1043, 1041, maybe I'll place my entry at 1038, 1039. Now where do I place my stop? First thing I do is I place my my pivot levels. I'm sorry. Now, if I have a pivot level somewhere nearby that the sell entry, if there is a pivot level somewhere close above, I will place my stop above the pivot level. Now, first place where we can place the stop is above the pivot level. Now, what if there isn't a pivot? Like here, look, all the pivots are here below. We don't have a pivot right there. Oh, this can happen. But what we do in this case is I will measure the distance between the A and the D. And we can see here A is at 108.70. Here the D is at 1043. This is roughly 200 pips, about 170 pips. I take about 20% of this distance. So if it's 170 pips, that means about 34 pips. And I will place my stop 34 pips above my entry, and I will add the spread. So if I'm trading a currency pair with a tight spread with 2 pips, let's say, and I will place my stop 36 pips above the entry. But if I'm trading an exotic pair that has 6 or 8 pips spread, then I'll place the stop 30 to 34 pips above the entry. Now when we enter short. Now where do we limit? First place we need to take profit is above X. X, after we broke X, X becomes the closest support, and this X will hold very strong support. Now, if bulls would want to break this resistance level, what price will do is price will drop, and because it already did very large move, it will be very hard for price to break that resistance level. So it will be impossible for price to just break that resistance level. And this is why crop is working so well. Now, what will happen if price would continue the bullish trend is price will bounce off the resistance level. It will come back, will find support at the closest possible resistance becoming support level, and this is the X. And then will continue. It will break the level. It might consolidate for a little bit, but it will break the level and will continue bullish. This is if bulls are in control. Now, if bears are in control, there's absolutely no problem for us. It will hit all our limits very quick. Now, because this is the closest support, we want to profit our target one above that resistance. Now, most of the time, I would place my second target above A, because this will be another strong support. Now, the A will also be a strong level of support. I most of the time place my second target above the A. Now, if you want to scale out your limits, let's say you enter 10 minutes, you can limit a couple here, then I will limit a couple above, and see what I did. What I did was I put the fib between the A and the D, because this becomes now the recent main swing. Now, AD will be the main swing. Now, what do we have here? Convergence of resistance with 618. Now, this now is resistance becoming support. It is very possible that price might bounce off this level. Also, look how here the X is converging with 382. Now, here, look how C is converging with 786. Now, all those levels can be your additional limits. If you're entering more positions, let's say, and I will recommend this to people who are trading, let's say, one standard lot. Instead of trading 3 or 4 standard lots, at least in the beginning, what you can do in order to scale out, well, trade instead of one standard lot, trade 10 minutes and scale out those minutes on the way down. This way, you'll be making profits as price moves lower. Then my furthest target will be here, the 127 extension of the XA swing. Now, this level will still, even though price broke the X, went up all crazy, this level will still hold support. Most of the time, after crap, if price resumes the bullish trend, it will be somewhere between the 127 and 1618 extension of the XA. So I will profit my last target at the 127. And see, in this case, we said from the A to the D, we have 34 plus, let's say, 2 for the spread, 36 pips stop loss. Let's see how much is there to target 1. Now to target 1 we have almost 60 pips. Note how even now with this pattern, even target 1 has almost double the risk-reward ratio. This is amazing pattern. It holds a lot of potential, big profits, small stops, huge risk-reward. Now, second target, if we use the B, is now almost 3 times the stop. If you use C, we're going to almost 4 times the stop, all the way to the A. As I usually do, target 1 here, double the stop loss. Target 2 is almost 4 times the stop loss. And target 3 is sometimes between 6 and 8 times the stop loss. Here, if you calculate those targets, even if you're losing on 7 or 8, and this is impossible to lose 7 or 8 crabs because probably the probability of this pattern is about 80 to 90%. But even if you lose 7 to 8 patterns and you hit 1 or 2, you'll still make money if you're following the rules, because your last target is like 8 times the stop. The first one is 2 times. A lot of times, most of the time, you have target 1 and 2 hit. Target 3 you have filled sometimes. It won't be every time. Now, most of you guys know head and shoulders pattern. Well, what I'll do here, I'll kind of draw a head and shoulders pattern inside. I'll try. And I hope it will look like one. It won't let me draw to the right anymore. Let's say this is the left shoulder. This here would be the head. And this will be the right shoulder. I'll draw a couple of circles at the shoulders. Now we've been in a bullish trend. Price forms head and shoulders. And what we do is, usually we'll have trend line that's broken. Price will take here this low. It will come back to retest the left shoulder. And this is where we notice the head and shoulders, and this is where we enter at the right shoulder. Now, a lot of times, the head, at the head, and this is the only way you can actually enter at the head, is if price forms bearish crab at this price level. It can also form bearish butterfly. But a lot of times, where we have the head on the head and shoulders, we might see crab or butterfly. Those patterns will reverse the trend. Then we'll see the head and shoulders, and the trend will continue. Now I'll give you an example with a crab. In the meantime, if you guys have any questions, feel free to ask the questions. And I will show you a crab on real charts to see how it played out. Sorry, it was here. Now this is our pattern. Price has been in an uptrend. Here is the 1618 with 124 convergence. You can see we have perfect convergence to the pip. 0.9251, 0.9251. The high is 0.9251. As I said, when we see a crab, and if the convergence is so good, most of the time price will just hit the entry level to the pip and it will collapse after. Now, do you guys see anything else here on the chart? I'm curious too. And as we talked, here would be target 1 above the X. This is the X. Here is the A. Target 1. Target 2 is above the A. Target 3 is above 127. Here is 127 of XA. This is target 3. Now, do you guys notice by any chance anything else besides the crab? Good. Victor saw the head and shoulders. Here is the left shoulder at the X. Then we have the head all the way up here at the D entry. Price took the low. It came back to retest the left shoulder. It formed the right shoulder and it continued the bearish move. Now still, I'll keep my limit. So we had a limit for the crab above the X. We had one above the A. We had one above the 127. Price actually moved even lower below 1618. And then it came back to retrace. But it hit all limits. Now look how here, well, as I told you guys, we have this bounce between the 127. I'm sorry, I will draw horizontal lines between 127 and 1618. See how price bounced between those two levels. Now if price would to reverse, this is the level where price would reverse most of the time. And this is why I like to take profit above the 127. Because once it comes between 127 and 1618, this is very high buying area. Now, we're done with the crab. Here, for the head and shoulders, what we do is we pull fib between the head and the low, and we find convergence of the left shoulder with a fib level, right now 618. This, for me, becomes my entry level. 91.87, 91.85. I will be selling 91.85. Where do I put my stop? Above the head. Now, if stop is too large, I would wait for bearish candlestick formation and I will place my entry 15 pips above the candlestick formation. But I want this candlestick formation to close below that level. So if 91.85 was my entry, I want the candlestick formation to be closing, below that entry level. So if we have a few more candles up here, let's say, and then price forms an engulfing bearish candle, but this engulfing bearish candle is formed above my sell entry, I will pass on that trade. I want the candle to be closing below my entry level, because this entry level, if price closes above, that entry level will hold support and price will come, hit it, and it might continue to trade bullish. Now see how here we have a few candlesticks. Price formed engulfing bearish candle that closed below the entry level. The red line, the red horizontal line is the entry level. We have bearish engulfing closing below. This is where we enter if we want to use candlestick formation. And then we write the trend. And for head and shoulders, I use limits. Here this low, above the low, and above the 1 to 7. But this 1 to 7 comes from that swing. The swing from the head to this low. And we can see target 1 was filled, target 2 was filled. Price reversed and continued to trade bullish. Now from here on, we don't care what's happening because trade is done for us. If you mean for a morning star, this here, oh, this here isn't morning star. This is not a morning star. The morning star is supposed to be at the top of the formation, not below. You can't have candles that are above the morning star on both sides. This is not morning star. Now, if you find entry, I'm sorry, evening star. Yeah, the evening star. If you find the pattern on 1 hour chart, best thing for you to confirm if you're using candlestick formation is to use candlestick out of 1 hour chart. Now you can use sometimes candlestick from, especially if it's when session is opening, because we have very, very high volatility. So if at London opening price hits that level, most of the time you will see that price will start moving very fast, because we have high volatility. A lot of orders are being filled when the session opens. So in this case, you can go to a lower time frame to look for candlestick formation, and from 1 hour you can go probably to like 30 minutes, maybe 15 minutes is a little pushy, but you can go as low as 15 minutes for candlestick formation to confirm your entry. B for the crab can be between, yeah, this is something I didn't talk about, but B is supposed to be between 618 and 382. Now, let's see if I still have, no, it was, it will be clear on this chart. I just need to delete the lines. Now, here the question was about the B. Where is the B supposed to be formed? Best is when B is formed between 618 and 382, and I'm talking about the main swing, XA. So in between those two levels. Now this is by the book. B needs to be in that range. Well, as long as we have the convergence, we have the pattern. Now if sometimes B can be maybe a little above, maybe a little below, but if B is way off that range, we won't get convergence anyways. If the B is somewhere at the 86 or 786, well, we won't have convergence at the 1618 on first place. In order for us to get the convergence of one of those levels, B is supposed to be in that range. Now look, when B is right at 618, we have 1618 with 2618 convergence. If B is a little lower, we'll have 3618 converging right there. Yes, it could be anywhere in those levels. It could be 41450. It does not have to be exactly 618 or exactly 382. As long as you have the convergence, you have a good pattern. If you guys have any other questions, please let me know. If not, I'll continue with a couple of patterns that might be developing. Now, the question is if I confirm the pattern with divergence on RSI. I can use a few confirmations. First, and probably this is the best confirmation the confirmation I like the best is if I have pivot level converging with the fib convergence. First best confirmation for me is the pivot level, and of course we're talking about resistance or support for a bullish pattern from higher time frame. We need to have that. That resistance or support can be formed by fib convergence from that higher time frame. Let's say we have huge Gartlimp. That is a sell Gartlimp on a daily chart. And on the 1 hour, we've been in an uptrend in that CD leg from the daily Gartlimp. And at that D Gartlimp from the daily, we form bearish crab. This is also resistance level. Now, another confirmation I use is I use MACD divergence. I don't use so much stochastics RSI. You see it on my charts, but I would use more MACD divergence. I primarily use daily pivots. This was the question, if I prefer daily or weekly. I prefer daily pivots, and my pivots start at midnight Eastern Time. The question is, can you tell us about the percent of the time this pattern works? I would say that crab patterns work anywhere between 80 to 90%. They're very accurate, and you see them most of the time work to the pip. You're required very small stop, because if that level breaks, it will break. That if the level breaks, is because something is happening. Maybe there is huge news announcement or high volume of money going through, and because in normal market conditions, it will be very, very, very hard for price to break resistance level to fib levels at the same time when price has such a long leg. Now, most of the time we'll see price movement, pullback, price movement, pullback, and those moves are harmonic. I'm sorry, those moves most of the time are some average moves, not too big, not too small. We'll see small, we'll see a little bigger, but at some point price makes a move like this, finds resistance. Don't you think it's time for price to pull back? It will be very rare, because price is already exhausted here. People will start to take profits. They will start limiting. When they start to limit, we enter, because their limit is a sell order. Now, everyone that is in this bullish trade would want to limit at least partial of his position before that resistance level. And this is why it's so important to look for those patterns at the resistance level. Because if you are in this bullish trade here and you see this huge resistance level, you see a couple of fib convergences, maybe a daily pivot also. But what would you do? Would you stay, or you would limit before that level, maybe at the level? Now, most of the traders who are in that bullish trade, they will limit because they know that this resistance is too strong. Most likely its price will pull back. If price pulls back, they will have the opportunity to enter. If price continues, eventually price will pull back. It will retest that level. They will have the opportunity to enter again, and they won't lose anything. So the odds are at this level, price will at least bounce. Now, this is why we want to look for this bearish crab at a strong level, strong resistance, not just anywhere. Don't look, because most of the pattern recognition softwares will generate crabs all over the place. You don't want to trade all those patterns. filter those. Put your education in place, use your brain, filter all those patterns. It is a good tool that some softwares out there will show you, okay, you have a crap convergence here, but at the end of the day, you're the one who's placing the trade, and you're the one who needs to filter all those trade setups that those softwares will give you. There is a couple of patterns developing right now. This is 2-hour chart, Aussie JPY, and there is bearish head and shoulders, and this level here is very, very strong resistance area. Let me see it on the chart. Look at this area. This is 4-hour chart. Look at this high, this high, this high. This is nice place. Oh, I'm sorry. This is nice place to sell. Of this head and shoulders is developing at that level. 79.50 is a sell. We want to use candlestick formation for that sell entry. Place the stop above the candlestick formation. Another pattern, I believe this one is already in. Let me see on the charts. The entry was 0854. On a 10-minute chart, 0854. The low was at 0853. It's already moving. This is Frank JPY, also a sell pattern. I'm sorry guys, I'm going very quick. I wanted to do the market analysis on my own. I mean, like on the chart live, but we're running out of time. So I'm just showing the patterns. Those are posted on our website. We sent email and SMS alerts for patterns like this. Thomas is saying that there might be a sell bat on Euro 60 minutes. Let's take a look. Euro 30 minutes. Here is the B, here is the X. A is at the low. I will also measure the proportions, 1:7 proportion. The only thing about this pattern is that we already traded here below the C. It's actually at this lowers the probability. Price trading below this level here a little lowers the probability of this pattern. But if price hikes all the way up here, it's still a good pattern because we have a lot of convergence. The convergence is very good, almost to the pip. At the last swing, very last swing. Let's see what we have on this one. I need to use another extension. I don't have the, I'm sorry. Let's take a look with this one now. Convergence is very close. Not a perfect convergence, but it's still within 5-6 pips. I would use candlestick formation on this pattern, and especially where we have this convergence a little higher. If price would hike all the way up here, I wouldn't be surprised if it makes it to the 86 of this main swing, because it's already close to that level. Now this level also have good support from those previous highs. Now I will trade this pattern with candlestick confirmation, because price might, it can hike up to here, it can hike up to the next level. Okay guys, thank you everyone for coming in today for the Monday class. I hope it was interesting for everyone. You guys can always come and take a look at the website. There is free area with some trade setups. Also there is a lot of videos. You can check it out. We're also running special until the end of June, so it's for the next few days, half off of all subscription plans. If anyone is interested to check out the website, you'll have half off if you sign up by the end of the month. With this, I will be closing the video for today. Again, thank you everyone. I wish you all safe trading and have a good weekend. Thank you guys.